Hello guys, welcome to this short video. I made a YouTube poll on some of the videos you want me to make for you, and I got so many views, so many votes on this particular video on CRT, how I do my step down on CRT before taking a trade, right? So this short video, I'm going to be quickly showing you an example on Bitcoin, right? Remember, this CRT works on all assets, right? So if you don't know anything about CRT, please just scroll down on my page. You're going to find some videos too, about two videos I've made about CRT from basic to advanced, so that you will be able to understand this particular video. All right. So quickly, you even had the weekly analysis yesterday on the community, and we talked about Bitcoin buying from this internal range liquidity here after price closed above this high, right? And then we also see that we have a lot of trendline liquidity here, and then we expecting price to come right up to this buy side liquidity. All right, so we have this as a buy side liquidity. We're expecting price to at least come up to this point, which means our drawn liquidity is actually bullish, right? So now looking closely throughout this week, we noticed price came into this fair value gap and then got a rejection from there. And even price tried again to take this low, and then we're still now trading above the fair value gap. All right. So this is still good for this fair value gap so long as price hasn't closed within or even below it, right? So we're expecting more higher prices. All right. So now, since we are bullish on the weekly time frame, we go down to the daily chart. Now, looking at the daily chart, we see that all right, price did a total soap into which was within the weekly fair value gap, and that was into this PDR, right, which is this other block. So you will also notice I've talked a lot about inducements and so on, which means you can have a POI like this. You can have a point of interest maybe around this point, and then you see price just reversing slightly below above that your key level, and then most of the time when the market stop on this area, it's likely going to be reacting to this key level to give you a massive entry. This alone is actually a model and it's very profitable, right? But then you have to know the direction of the higher time frame. If not, you will consider this to be a break of structure and you want to sell somewhere around this point and then you get stopped out. So you have to first of all know what the higher time frame is saying, so that when you see price taking an inducement low like this, or price rejecting a low to move higher, is in the case of an uptrend, you will not be confused. All right. So this is just basically things that happen all the time. And this we are even going to be using this a lot, all right, to frame our trade. All right. You having a key level and then price just reversing slightly without actually hitting that key level. Most of the time, price will come back to that level. And also you will notice that sometimes it will act like this, which means that this pullback that happened here will be maybe like a single candle, right? It can be a single candle, and then at the end of the day, price coming back to tap this area will kind of be like giving us a CRT entry here, and then for price to move higher. So let's just move to this example. I don't want this video to be long. All right, so we had not nice rejection from this other block and also from the weekly fair value gap, and you can see that we had created this fair value gap here as well. So our focus shifts from that point to this daily fair value gap. So what are we looking at here? We expect price to at least fill this fair value gap and then we continue higher, right? Since we are bullish on the weekly, and even the daily is respecting bullish PDRs after we got in from this other block. So which means if you're kind of like a swing trader, you would have started buying already from this point. All right, if you have started buying already from this other block and then expecting higher prices. All right, but then since we're day traders, most of you are going to be looking for some entries at this point. So now, let's see, the market actually came back, all right, into this fair value gap, and we got a nice rejection from that point. And now also, you could say, all right, this is a good key level, right? This is a good key level. We can now expect prices to buy from this point. And also, you can say, well, this is kind of another CRT candle. Let me see. Let's go down to the 4-hour time frame so that we'll see what is happening here closely. All right. Oh, let me come back. I've gone so far already. All right, so looking at this candle, right? Remember the market books from internal range liquidity to external range liquidity. I keep emphasizing on that. The market grabs internal range liquidity, which can be in the form of a fair value gap, order block, and then it goes back for external range liquidity. So which means just looking at this particular area here, we have this candle now, right? This candle can be like our CRT candle, okay? This candle can be like our CRT candle, this candle alone here. All right. So if this is our CRT candle, what are we going to be doing at this point? Let me just replay this so that we look at it together. Okay. So we have a CRT candle formed. So remember what I said, if we go down below, you're going to be noticed that we have a swing low here, right? Maybe you have some PDR here, which would then expect this low to be an inducement into that key level before higher prices. So then let's go down to the lower time frame, go down to the 4-hour, and I will try to see. Now, looking at the 4-hour time frame, everything here is actually in context, and you will notice also that we had a 4-hour CRT here, right? Price took out the high of this candle, and then the low was also protected, which means this candle is likely also our CRT candle, right? So which means you can be looking for sales back into this fair value gap, which is also the daily fair value gap, right? So if we're expecting lower prices, we know that price is definitely going to be filling this 4-hour fair value gap, right? Now, price took that high and then closed below it. That makes it, that's a validates that. And also we have some key level here as well. So let's see how price comes into this fair value gap of the 4-hour and also taking the low of the daily CRT candle. Let's go back to the daily time frame and see something. Remember, this is our daily time frame key level, right? Which is the daily fair value gap. Then now on the 4-hour time frame, this daily fair value gap can be refined into this level, all right, which is taking the low of the CRT. All right, so now which means if the market comes down and then takes out this CRT low candle, all right, if the market comes down and then it grabs this CRT low candle, if we get some bullish confirmations here, we can start buying immediately, right? We can start buying immediately because that would have filled this internal range liquidity and they will start targeting external range liquidity. Now, when you're targeting your targets on CRT are mostly the 50% before the external liquidity, right? So now let's see how price came back into this fair value gap. Remember I said after taking these candles high, this candle alone now is our CRT. You can look for sales down to this key level and then for prices to continue higher, right? So let's see how price did come back to that area. All right. Now, beautiful. So the market taps into our key level, right? Which is the daily, the 4-hour fair value gap, also taking the CRT of the daily, right? Remember this range is for our CRT on the daily chart. So which means if we're getting longs here now, our target will be the 50% and then the external range of this range, right? So now we go down to the 15-minute. We'll try to find out if we're going to be having an entry around this area. Now, look at something here on the 15-minute. All right. I mean, even think, let's see. All right, let's even look maybe, let's see, 30-minute time frame. Okay. Because one of the things is that you always try to have an entry based on and like you always have an aggressive entry and then a conservative entry as well. So for 1 hour time frame also had this fair value gap. You could have had an aggressive entry. Now seeing that we have this low as an inducement low into a key level, right? Just like what I explained earlier, right? You have price actually reversing in front of your key level and then later on comes back. People will see this as an inducement and they will start looking to sell short somewhere around this area, but which is not correct. You are forgetting to know what the higher time frame is doing, right? So at this point, we'll go down to the 15-minute. All we want to see now is a confirmation for higher prices, all right? Is a confirmation for higher prices. And this alone, this other block was already at key level, and also the 1 hour is a key level, right? Now, at this point, for me personally, to get into the trade, the moment the market closes above this candle, that becomes our order block, and then I can get in immediately. All right. That candle is our order block. If the market closes above it, I can start buying immediately. All right, so we closed above it and price has moved slightly higher. So which means if you're getting in exactly at this point, all right, if you're getting exactly at that point, you're gonna be having quite a big stop loss, right? So at this point with this expansion, I can then wait to see what happens next. Maybe we're gonna be having a candle that forms and gives us some kind of a fair value gap here, so that at least if we're taking that entry from that fair value gap, we'll know that okay, can even put our stops maybe below the fair value gap and will not have so much price to move. We will not have our entry that is too big, right? And most of the time, you can take your entry on the 50% of the fair value gap if it forms. Beautiful. So we then have a fair value gap here. Like I mentioned, you can divide the fair value gap into two, and then you take your trade at the 50%. This is just for us trying to get a risk that is actually smaller, right? Now, remember everything that is in context. We are actually bullish right from the weekly time frame. Daily has confirmed with the CRT, 4 hour has confirmed as well. And now we're on the 15-minute and it has confirmed as well. So we can have our entry here, and then our first target is going to be that 50% of this CRT, and then the remaining percent will be targeting that high. So this is if price comes back to this fair value gap, right? Remember, one thing you should never do is to chase price. You don't run after price. Just allow it to leave it. If it comes back to your entry, that is good, because you'll be able to journal this trade if it plays out. But if you're running after an entry around this area, you will not be able to journal the trade, or it would likely not be according to your trading plan, right? So the market comes back and even retested the other block and the fair value gap that we had as our entry. So let's see how it plays out. So the 50% is hit already. So at this point, you can actually scale out some profits, all right, because we are trading the daily CRT candle, right? So at this point, you can take out 50% of your profits, right? Now let's go down back to the 4 hour time frame. There should be something there that is interesting for us to see by now. All right, so good. On the 4 hour time frame, this is what we have here. Let me just put this like this. So on the 4 hour time frame, we got that nice rejection from the CRT candle low. And now look at the 4 hour time frame. There is something that you are seeing, you have to see here. Just pause the video and tell me what you see. Now we have an order block, right? The 4 hour has created another block. And then we have this candle with this range, right? So which means since price is reacting on the 50% of the CRT, there's a possibility that we can have a little correction and then price continue to move higher. What does that mean? This means we can maybe have this candle as CRT. Okay, we might be having this candle as a CRT candle as well. All right, and then the price maybe take the candle slow into the other block opening price, and then we continue higher. Maybe something like this. All right, if this happens, that will be beautiful, right? So we are focusing, let me see. All right, so let's go back to the 15-minute. If price is taking the low of this candle into this other block, 15-minute, we're going to be looking for entries here again. All right, so all right, so let's see how it looks like on the 15-minute chart. Now, what I explained earlier, right? You have a key level. You have a key level here, right? Then just before your key level, the market starts playing around, right? And then you get a stopwatch into your key level, taking out this inducement low. Remember, I said this range can be a single candle, which will make this a CRT candle, right? Just like what we're having on the 4 hour time frame. A range being our CRT, which is a range on the 15-minute, but a CRT on the 4 hour, right? So why am I explaining this? This is because even if you're not trading CRT, you can actually take this type of entry based on a model, all right? So which means that we can look for a PD array. We can look for an entry level that is below the 4-hour key level, right? Below the 4 hours 4-hour CRT candle. And then if we're looking closely, we'll notice that we have this bullish order block right here. So if we have this bullish order block, it means we can take a buy from this point the moment the market takes out the CRT low. So that is an aggressive entry, right? Remember, it is an aggressive entry. Now we have an aggressive entry. A consecutive entry will be when price comes into that key level, when price comes into this key level and then give us some candle confirmations before we'll get long, right? This will be a more consecutive one, but this one is an aggressive entry. Okay, so let's see the market leaves. Let's see how the market plays out at this point. Remember, our overall target is the daily CRT high, right? Which is the target for the first trade that we took. So let's see what happens. Okay, so we got tapped in on this order block. Now we are watching the candle formations. All right. If you do not take this aggressive entry, you will then be looking now for some kind of an entry that will help you to get in with a more tighter stop loss, right? So good. So we get in deep into the order block again. Now, looking at this closely, all right, for me to get into this trade without being aggressive, I'll wait for the candle to close above this candle here. All right, if we close above this candle, I consider it as my order block and I can get in immediately at the close of the candle, or I would like to retest the candle. All right, but if it depends now on the stop loss range, if the market just close above that candle like this, let's just say we have a close like this, I can take an instant buy. All right, I can take an instant buy order, but what if the close is something like this? You will likely have to wait for a retest, right? If not, you are going to be having a long entry and the stop loss is going to be big, right? So let's see. Price, we are already on this trade as well. Okay, we're just simply waiting for another confirmation, maybe to get on a consecutive entry. All right, so nice reaction from this key level. We had price closing above like this. So at this point, we can then take our another entry exactly from the close of that candle, and then we'll put our stops below the candle. Now, according to analysis, price should not be taking this low anymore, right? Price should not take the low of this candle again. Price should not take the low of that candle, right? So that's more of a consecutive entry, right? But then we had another entry here already from this other block, right? So remember all this, the context of all this trades started right from the daily or right from the weekly time frame. Okay, so let's see this. Okay, but then these trades you can start targeting 50% and high of this, right? We are looking at a higher time frame. So meaning the moment price comes to these key levels, you're going to be scaling out some profits. Right? So we retested the other block. All right. So those that you do not get exactly from the close of this candle, you will not be tapped in, right? That will be where you can take your long positions. And the market should not take the low of this candle. If it does, that's not good for the trade anymore. All right, so we're having a massive pump to the upside against the, and then boom, that's it. All right, so uh, the beautiful entry. I mean, it's been some good entries around this point. I think I've explained well. So if you still have any confusion or any worries about the trees, about this thought process, just leave it on the comment section and I will make it more clearer video about it. All right. So if this has helped you in any way, please like, share, comment, and God bless you.